Welcome to Full Throttle, the Presidio Group's automotive industry podcast. I'm your host, Jason Stein, Managing Director of Presidio. We're covering the deals, data, and dynamics shaping the automotive retail industry.
F&I, it's kind of the last bastion. I mean, one, it's very profitable in F&I. But if you could monitor that F&I manager in the pitch, if you could grade that person, if you could compare that person to other people within the group, I'm a big believer that F&I is about to become virtual, where maybe you don't even do F&I in the stores anymore. You got a room of 10 to 20 really, really good F&I managers sitting in an office in Cincinnati, Ohio, that are just really good at it and are able to get better grosses. And with AI attached to that, I think it just really powers a profit center that the dealer just can't give up. Like it's so important for the dealer.
You could say Chase Fraser has finally caught his breath. As founding and managing partner of FM Capital, Chase spent the better part of the last 2 years living on airplanes, closing Fund 4 at $240 million. It was the firm's largest to date, oversubscribed by 20% and anchored by a new partnership with the Holman family. Combined across 4 funds, FM Capital has now raised north of $500 million behind automotive retail technology, backed by 54 dealer groups and more than 1,100 rooftops. In this episode, we get into what that fundraising cycle actually looked like on the ground and why Chase thinks the barrier to entry for AI vendors has collapsed from $5 million to as little as $50,000. We'll also talk about why F&I, not the sales floor, might be the next function to go fully AI native, why humanoid robots could be working dealership service drives within 3 to 4 years, and why FM Capital just went back into Impel with a follow-on investment only 6 months after its first check. And we'll close on the exit environment. It's Chase Fraser on Full Throttle coming up next.
Hi, I'm Chase Fraser, and this is Presidio's podcast, Full Throttle.
It is always great to be back with my friend Chase Fraser. Never enough, and there's always insight. There's always education. Always things to learn with Chase. Welcome into the program. Great to have you with me again.
Good to see you again, Jason. How many of these have you done now? What I've been on, but what's the count now?
We're approaching 80, Chase. Yeah, and you were in the early days, and you set the tone for many guests who would follow. But yes, we are close to 3 figures. When we have number 100, you should come back.
I'd love that. You were always famous, and these have made you more famous. So
infamous, as they say.
Yeah.
Speaking of infamy, you were kind of living it in the last couple of years, especially when you closed Fund 4 last April. I'm guessing you're sleeping more now. Is that accurate?
Yes, these cycles, it's 18 months on fundraising and essentially 18 months to 2 years off. So yes, I'm at home more. How is that? That's nice.
Well, you have good reason to feel good about those 18 months. For those who were not keeping score, we were. Fund 4 closed at right around $240 million, your largest to date. We talked about Fund 4, by the way, when you were on last time, but we couldn't have imagined that you were you probably could, but you're oversubscribed by 20%. Walk me through that process and what it looked like for you from start to finish. I know you spent a lot of time on airplanes.
Yeah, I would tell you I was 4 days a week on the road, hundreds and hundreds of meetings. You really can't ask somebody for $5 million over Zoom. You got to sit down, you got to break bread. They've got to see who you are. But it was great. What ended up happening this cycle is there was a lot more dealers. We've always had a lot of dealers, but there was more interest. And I guess you'll ask me more about what's going on in dealer tech later, but dealers are interested right now. So we've got 54 dealer groups, 1,100 rooftops. It's a really nice place for our portfolio companies to test things.
What did you learn during Fund 4 that you didn't know before you went into it?
You know, you actually talked about that 240. I didn't know if we were going to get there. It was a little dicey raising money just in venture in general, right? And I put on the optimistic hat. I'm very wired that way. But I had my nights where I'm like, ugh, we're at 150. What do I need to do to move that to whatever's going to happen next? I'll tell you the big unlock for us was partnering with the Holmans. The Holman family, for those of y'all on the podcast know these guys, they're amazing family, multifaceted businesses and very successful. And they're actually a partner in Fund 4. So Bill Karras, you probably had Bill on this before
I have
at some point.
Yeah, good partner.
Bill's a good friend. He and I were running around the country raising money. And not only was it successful, it was a lot of fun hanging out with Bill on the road and seeing dealers. It was a good 6 months that we were out doing that.
Wow. What did you learn about auto retail tech?
Yeah, there's some interesting things going on right now. I think, AI, right? We wear it out, and we don't have to wear it out on this podcast if you don't want to, but I'll make this point. There's just too many vendors out there right now. In the old days, it was the barrier to entry is probably about $5 million to get in to create a company. That barrier to entry is now $50,000, $100,000. I bet it's once a week where one of my guys says, yeah, this company didn't exist 45 days ago. And we weren't having those conversations, 10 years ago, 5 years ago. So there's going to be a cleansing of that. There's going to be people talk about consolidation. That's probably not what is going to happen here. A lot of these guys are just going to either go away or they're going to be absorbed by someone for 5 cents on the dollar, 10 cents on the dollar. So it's a bit of a dance for us right now as we're looking at companies that are in the space.
So we'll get to AI here in a minute, but I want to just finish on Fund 4 for a second. What did you think was different about raising a fund in this environment versus a few years ago? Are LPs more cautious? Are they more selective? Are they asking different questions than they used to?
Yeah, this is maybe not the answer you thought I'd give you. We actually have just gotten better at our craft. And it was harder. Not only was it harder to raise money in the beginning, our story wasn't good. And we would sit down with the potential investors and it just wasn't concise, and we didn't have our act completely together. And so what I think we learned as a firm is really we grew up as an organization. If you combine all of the 4 funds, we're north of 500 million at this point, which is a lot of fun, but it's also a lot of money, right? And so there's a lot of responsibility with that. It's a heavy responsibility because virtually all of these investors have become friends.
Sure. Over the last 3 to 5 years, how has investor appetite for automotive retail technology, especially AI-enabled tools, evolved? And related to that, what's changed in the last 12 to 18 months in terms of what actually gets funded?
Dealers are doing deals themselves, and I think it's super healthy. Obviously, we want them to be investors in the fund, but they should invest directly as well. And where that was just nobody was doing that, or 2 or 3, 4 dealers were doing that 5, 10 years ago. A lot are doing that now. And then the other trend I really, really like is there's tech now being born in dealer groups, and it's being spun out of dealer groups, and it gives us an opportunity to invest in that company, but it gives us a lot more conviction because we like that a dealer has already worked out the kinks.
Yeah, road tested.
I won't name a name, but I was talking to a really big dealer group last week that is spinning out a really cool product. And it helped me so much in due diligence because I got done with that call, and it was a very different kind of call. We chatted it up for 45 minutes solid. We talked shop. He knew I understood. I dang sure knew that he understood. And so what for us, due diligence is probably 60 to 90 days. This accelerated that due diligence because I got a lot of answers I needed just in that 45 minutes.
Right, right. When you evaluate AI-driven auto retail companies, what specific pain points are you looking to solve? What proof points, payback period, retention, efficiency gains are you looking for before deciding to invest?
Yeah, a lot of these small guys, there's a number of challenges. One is they haven't quite figured out whether or not they're a product or a company. So they come to us, it's a $800, $700 a month product. It does something for the dealer, but in our minds, I don't know that this is actually ever going to be big enough. Is the total addressable market ever going to be big enough? The other challenge with some of these guys is they want to use the dealer's data. And we really like this mid layer of companies we're investing in right now, the Impels, the busy cars, the True Videos, people that have thousands of dealers. And when you've got thousands of dealers, you've got scale. And when you've got scale, you've got data. And when you've got really, really unique data, the models run better. So the biggest fundamental problem with that guy who started the business 45 days ago is he just doesn't have that unique data. Now, there's going to be a handful of those guys that make it, for sure. But we, of late, have been really placing bets on that mid-tier of software, which is some of the names that I just described.
Yeah, and you mentioned Impel. If we get into exactly what you're doing, you went back into Impel with a follow-on secondary purchase in July, only 6 months after first investing. What changed in 6 months that justified doubling down that fast?
You know, I feel like about every 10 years of just walking that NADA floor, you can just see a booth that is just teeming with dealers, but more than that, teeming with energy. Devin in particular is a unique individual where he gets up in the morning and he's ready to sell something. And so that's infectious down to his people. Mike, his partner, is wonderful as well. They are drivers of this sales engine that's very unique. And I've never even shared this with them. I think that dealers respond to that. Dealers like, if you think about the heart of the dealer, he is a salesperson, by the way, and he likes good salespeople, and I think he likes good sales teams. And, oh, by the way, they've got the best AI solution, in my opinion, of probably anyone. I mean, we could debate that for the rest of the call, but they're very good at what they do, and they've got a sales apparatus that supports that.
Yeah. You look across sales, service, F&I, marketing, and back office. In your mind, Chase, what part of the dealership presents the largest remaining upside for AI and auto retail over the next decade, and why?
Definitely F&I.
Yeah.
And you're starting to see the vendors move that way. The path was obviously, let's start. Well, they actually had to start in the back because it was inbound calls. Then they went to the front, and they're working on some outbound. Let's talk about outbound in a second because I've got some interesting thoughts there. But F&I, it's kind of the last bastion. I mean, one, it's very profitable in F&I, but if you could monitor that F&I manager in the pitch, if you could grade that person, if you could compare that person to other people within the group, I'm a big believer that F&I is about to become virtual, where maybe you don't even do F&I in the stores anymore. You got a room of 10 to 20 really, really good F&I managers sitting in an office in Cincinnati, Ohio, that are just really good at it and are able to get better grosses. And with AI attached to that, I think it just really powers a profit center that the dealer just can't give up. Like it's so important to the dealer.
So imagine the top. Yeah, go ahead. Yeah.
Well, I was just one more thought on that is that the dream for that though, like where I think it's even better, is once AI gets to a place where outbound calling is human-like, There's two areas that dealers have just wanted forever. One is private purchase vehicles, used vehicles, right? You and I have been bouncing around this industry for decades. We've been trying to figure that one out forever, right? If the AI can call and it actually sounds like a human, and Mrs. Smith picks up and I actually cut the deal and or have Mrs. Smith bring the vehicle in, that is Katie bar the door, right? And then the other one is dealers have got hundreds of thousands of leads, hundreds of thousands that are old, that they literally, because they're not fresh leads, like the fresh up, they just are sitting in some database somewhere, maybe on some guy's laptop, right? Once you're able to take that lead, run analytics against it, really understand what's in that person's garage, and then outbound market in bulk, by the way, with AI, there are so many buyers in those leads. But those two things I just described to you, in my opinion, really don't exist today. Now, There's going to be startups listening to me right now like, no, I do that. Well, they don't do it well enough yet, in my opinion, or in our opinion as a firm.
Right. So when we get down to the real essence of it, cost structure, margin, imagine a top performing dealership group 5 to 10 years from now, and imagine AI functionality and that tech stack. How materially will those capabilities have changed that will affect their cost structure or margin profile from today to that decade, in your view?
Just a macro view, and then I'll talk micro. This is the most exciting period of my career because of AI. It's as an investor, it's like this 3-dimensional chess game where it's very, very difficult to make the proper decision because there's so many different decisions to make. But the dealer of the future, people talk a lot about this headcount reduction. There will be some, but this isn't really the industry for that, right? I own a call center company and I've got 800 heads in there. Yes, that's a good application for this. I will tell you one of the things we're interested in right now that is really bleeding edge. So we're ahead of the game, hopefully, are humanoid robots. We had our first pitch from someone who's focusing specifically on the service drive, and he's not close. But is it 3 years? Is it 4 years? It's something in that range where a vast majority of the big dealer groups have got a humanoid robot in their service drive. We've got a robotic tire changing company we've invested in. We've got a lot of our LPs that are doing robotic parts movement. The Holmans actually are part of that. Robotic floor cleaning. So I think there's two things that are going to happen. Robots, which may be a bigger labor decreaser than even AI, actually. And then obviously AI. AI is just going to be more efficient. The dealers are going to, I think, ultimately sell and service more vehicles because the AI gets better.
Yeah, I was going to get to physical AI, which is exactly what you just mentioned. So it's models paired with hardware. You mentioned robotics. And that's the physical AI is pulling in serious capital right now alongside agentic AI moving into regulated high stakes settings. You're seeing that show up in some deal flow, or is it still a little bit of a separate universe, Chase?
So when you think about the way I invest, I've got the funds, obviously, and then I've got a passion for venture in general. So I invest in things that are non-automotive. So I'm doing a lot of physical AI personally. Really like space tech, and it's more of a passion project than it is anything. And then I'm doing robotics. Those three areas outside of automotive. But to answer your question, physical AI really has not landed yet in our space. It will, it has to, because you need the physical AI for the robotics.
When you think about capital raising today and against the backdrop of everything that you've just explained, mega rounds, concentrated AI capital, more selective funding for everyone else, how does it change what it actually takes to raise a fund like yours right now?
I'll tell you what we're doing right now, and this is a bit of breaking. I don't know if it's a breaking story, but it's at least a breaking story to me. We're actually creating our own agents internally. So I want to quadruple, essentially, triple or quadruple the size of the company. And the way that we're going to do that is with agents that actually have very, very specific job functions. And then those agents are going to help me in my CRM, with fundraising, with deal sourcing, with due diligence, with communication, with you name it. We've got 36 different permutations of things we want these agents to do. I think as we move into this next cycle, that's the differentiator. It's not so much, we're not going to replace people. In fact, our team is amazing. What we'll end up doing is augmenting. That is the conversation we have internally. How do we do what we do, but how do we do it far better? And we can do it with agents.
Using your own level of sophistication that you hadn't even considered 3 years ago, 5 years ago.
I'll tell you, dealers are about to do the same thing. There's a couple of startups that have popped up that are taking all of this disparate data, DMS data, CRM data, website data, putting all that data in one place. And then the next move is to run AI off of that data lake and then be able to make good decisions. So whether it's a little bit of us eating our own dog food, right? We talk about the agentic models. Well, we need to run our own agentic models. And so the dealers are going to start doing more of it. And so are we.
A couple of other things that you've been involved in. You backed RockEd last year, mobile first, gamified training for the automotive workforce. That's a very different kind of bet than an AI sales tool. What told you workforce training was worth a check?
An interesting little rule in VC is you back founders who have had exits. And Marco Schnabel is an interesting guy. Automotive Masterminds was a great exit. We weren't lucky enough to be part of that, barely missed it. But I wasn't going to miss it again. And so I was pretty dogged with Marco, hey, I got to get in your deal. And it's a little bit of backing winners. Now, it's more than that, obviously. This product's good and it's needed. And TikTok-like short attention span training is what we need. And so he's having luck at both the OEM level and the dealer level. But that business is great. And Matthias, who is actually running the business, is a superstar as well. So we've got high hopes for that one.
It's great. Let me ask you about the valuation and exit environment. What does that look like specifically for automotive tech right now? Are you seeing real M&A activity, or is everyone still just waiting on the sidelines?
Yeah, maybe I'll start macro. The public markets really demolished SaaS, and I think they greatly overreacted. But what happened is it trickled down. And so we were talking yesterday. There's an internal group that looks at private company SaaS multiples, and for the first time since I've been doing this, multiple of revenue dropped into the fours, and in some cases below 4. And we've lived in this environment where, in our space at least, businesses trade really for call it 6 to 10x revenue. So we're hoping, and it's more than a hope. We think it's a momentary blip right now, and that it'll correct itself. This overreaction by the markets is just that. But your question around M&A, we're seeing more activity. It was quiet, really, for the last 18 months. This next 6 months, without oversharing, is going to be good, not only for the fund, but I think for the industry, VC in general. There's just a lot of stuff that's percolating.
an indicator of the appetite for technology as well as the appetite for deploying capital, right, Chase?
Yeah. Yeah, I'll tell you today I had an interesting, we got a cash distribution from one of our companies. That's very unusual in VC because most businesses are losing money. So it was nice. It was nice to see one who had some cash flow and could pay a dividend. So you're catching me on a high note. It's nice when you got money coming back.
That's great. Just a couple more things. If you're a founder walking into FM Capital right now, what gets you to a yes faster than anything else in this market?
We've gotten to be really focused on the CEO's personality. And I know maybe that's slightly non-intuitive. Everything else matters. But that sat down with that guy or gal and looking them in the eyes and just thinking through, it's a bit of a psychological profile. How is this person going to react when the world falls apart? Because it's absolutely going to. That is really, really huge for me. If you think about like what my whole existence, right? We finance the unbankable. But what we really do is we finance dreams.
Right.
Right. And it's beautiful to do that, right? Like I sit in the room with that person and it's so exciting for me. And that allows me to live my dream. Right. And it's not lost on me that I'm very fortunate to be able to do that.
Yeah. What's the one thing about VC right now, whether it's the AI concentration, maybe the IPO comeback or secondaries boom, that people outside this world get completely wrong?
Maybe this is stating the obvious because I think AI has become such a part of our lives, but we are so in the first innings with that. And the change that's coming, I know, Jason, in mine and your careers, we've not seen anything that even scratches this. Everybody talked about autonomy and, oh, hey, we're going to, I can now sell cars online and I've got this newspaper that, these things these gyrations we've been through that are so, in a lot of ways, silly.
Yes.
This is seismic and fun.
From silly to seismic. It sounds like a great headline. You will be in attendance, joining us, we hope, as a member of the audience for the Presidio Auto Technology Summit, our fourth one, the Denver Art Museum on October 14th. I know you've learned a lot sitting in that room before. I know you've learned a lot sitting on stage in that room before. What are you most excited about as you think about getting together with your peers, capital entrepreneurs, in October in Denver?
Well, a bit of a shameless plug for you guys. For those of you listening, you guys need to come to this. It's great. It's probably the best technology investor conference in our space. So come be a part of it. But two, going back to me looking in the whites of the eyes of that entrepreneur, we do lots of Zooms, right? We see 650 deals a year-ish. Sitting down with somebody out in y'all's hall or grabbing them for 10, 15 minutes, it's just different. And I get different context and I see those companies differently, bluntly, and I'm able to do a lot of them. I know Brody walks by and he's like, Chase, are you going to come inside? Because I'm outside trying to talk to a lot of these startups. But the other thing is I get to what it's a term in our space called co-invest. We want other VCs in our deals because it mitigates risk. So if I can have another smart person on that board sitting in the room with me, because things are going to go wrong with certainty. And when they go wrong, it's nice not being on your own island. It's nice having someone there who goes, hey, have you thought about this? And those guys are there is the reason I'm bringing it up.
Wonderful. We love having you there. We look forward to seeing you October 14th in your home neck of the woods in Denver, Colorado at the Art Museum. Chase, it's always great being with you. Come back again. Come back again for the triple digit show.
I'd love that.
All right. Chase Fraser, thank you so much for being on Full Throttle. Thank you.
course.
That's the 72nd episode of Full Throttle. Special thanks to my guest, Chase Fraser. Thank you for watching and listening. For a library of these episodes with industry leaders, go to thepresidiogroup.com. You can also find a library of these shows on the Presidio Group's YouTube channel. I'm your host, Jason Stein. We'll talk to you again next time.